Yeah. Oh yeah.
Yeah, she's back there. Aren't you
Alrighty,
two? And
we're live. Yeah.
All right, everyone. And welcome. It's Two Accountants, One Gap. Where two accountants try to figure out how to decipher this one gap code, including ASC 606 and potentially down the road ASC 842. Today we're going to talk about revenue recognition, kind of the simpler of the two, I think, to understand between that. I told Bacon this, and I tell people when you're applying for jobs, you're going to see like companies all the time ask about ASC 842, ASC 606, and what's the one for 842? It's all in, yeah. So it's 842 and 606. So this is 606, which is revenue recognition.
Yes.
It's a simple concept, but it can be difficult. Really, what this comes down to is implementing it in like policies and procedures. I know when I was at my last company and we were going through or filing our S1 and going public, our one weakness was revenue recognition. So that was like one of the things to fix. And Fabio's referencing one of the movies I hate the most, and I told people we're going to take a quick side note. I hate Titanic, and every time I bring this up, it ruins it for people. But what a stupid movie! This woman lived a whole life. She had family, she had kids, she had grandkids, probably great grandkids. And all she remembers is a fling she had with a dude on a boat 80 some years ago. What a pathetic life and stupid movie.
Is it really so much that, or is it so much like remembering the prime of your life?
I'm assuming she had more of the prime of her life afterwards. Hopefully, like her husband.
No, I'd hope so, but then again, like given the time frame, I not to get all feminist, just more of a I don't know.
I wouldn't say it's like even like
but
anti-feminist that I take. I think it's just like a stupid like.
yeah.
I mean, it's what it is, but
Neither here nor there. Anyways, revenue rec.
so revenue rec. So let's flip this on. So we're gonna go through.
Yes.
And we're gonna start. So revenue recognition is how a company recognizes revenue. It's pretty self-explanatory. And there's really two ways you can do it. According to GAAP, I think there's only one way. I could be wrong, and I might need to double check that, but I think GAAP only allows accrual. I don't think GAAP, if you're public, like allows you to actually post cash-based revenue recognition, which is interesting because we'll get into that.
Yeah.
So do you want to give like a quick rundown on the difference between like cash basis and accrual basis accounting for revenue?
Yes. So, if people referred to our work with the income statement and the cash flow statement,
Mm-hmm.
or statement of cash flows, it's basically that sort of concept of you're running a business, or you own a business, or you're some sort of regulator. You want to look at a company. Well, how do you define business activities? Do we just only care about cash? In which case, cash statement of cash flows,
Mm-hmm.
probably your friend, cash basis of accounting. Relatively simple. The
Yep.
problem is that it isn't necessarily truly accurate.
Right.
There also is the component of cash can certainly be lumpy. Like if there is an element of seasonality to your business that you're running, maybe you get the cash up front right away, or cash is paid, but the performance obligation isn't met. So yes, you have cash, but did you really necessarily earn that revenue?
Right.
Which is why revenue, from generally speaking, under GAAP accounting rules, broadly, with that income statement, you're recognizing the revenue once that performance obligation has been met, not necessarily when the cash has changed hands within that given time period.
And so on cash basis, we recognize the cash when it's paid, or the revenue when cash is paid. Correct?
Yes. Once it's gone. Yeah.
And so basically, and it kind of makes sense to me because most small businesses, you think about, for the most part, if you're in a small business, it's a simpler business. And introducing the complexity of like accrual accounting doesn't make sense. Like I do some part-time work for a moving company. They
Yep.
move a person, the
Mhm.
person pays them.
Yeah.
There's like an hour delay difference between when they actually earn the revenue and get paid in cash. So it's like,
Yes.
why break that out? But then I think, and one of the reasons that GAAP accounting allows accrual is, so if we want to talk through, we can explain what's accrual accounting and how it differs from cash based.
Yes. Yeah. Because I mean, there is an element also of expense recognition, but that's another video or live stream.
So, hold on. So then if you want to like walk through what's accrual then, or you didn't do that, right?
Not fully. I mean, it's just more so like the performance obligation component from a revenue perspective.
Right.
Yeah, because like not to bury the lead, but the to harken back to GAP's conservatism principle,
Mhm.
expenses are once they're incurred, once they're happened, as immediately as possible. Whereas revenues, that there's that obligation being satisfied perspective once
Mhm.
you at the business have performed or done what you've needed to do.
Right. And one thing that's very interesting, anyone
Mhm.
will tell you this, and they even have it right here on this page.
Yes.
One of the pros of accrual accounting is it's more accurate. It's a
Yes.
more transparent picture of your business finances.
Hmm.
And the cons is that's more complicated. So if I'm a company and I'm switching from cash to accrual, I may do that because I'm becoming more complicated in my business. I'm hiring some full-time accountants. I want to be more transparent. I want to be able to make better financial decisions.
Yeah.
Because it's easier for me when I'm budgeting, when I'm looking into the future. Oh, here's my revenue number. Here's how I'm going to budget for this. This gives me better, cash can be lumpy. Maybe I get cash payments at different times, whatever.
Hmm.
What do you think would be the reason to go the other way, to go from accrual to cash accounting?
So some people may cry foul and be like, "Well, rabble, rabble, harumph, grab concept of conservatism is should not bend or compromise."
Mm-hmm.
But if it's an inaccurate picture of, or it doesn't, there's a disconnect from how things are to reality, then maybe some adjustments need to be made. Maybe you should go from accrual based accounting system on revenue recognition to purely cash based. And I think that is a great Dean Kamen, the founder of or the inventor of the segue
Mm-hmm.
into what we're talking about.
Yes. Now, what if I'm doing a hybrid? What if I'm doing some accrual and then I'm going to choose to do cash from other things?
That I imagine people will take issue with,
Mhm.
as far as like if a management team is bullying their own internal accountants, saying,
Mhm.
"Yeah, we pick and choose."
Right.
That being said,
And-
though, there are businesses that are more complicated, though, where maybe there is a legitimate case that a specific business segment should do it that way.
Right.
Maybe there's some leeway, but broadly speaking, though, that pick and choose buffet style,
Right.
yeah, some skepticism probably needed.
And before we get to the specific example that we want to get into, I want to just make sure we peel back the layers a little bit on this, because any company that operates should make revenue. They
Yes.
should. I mean, you can argue they should make income, and any company that needs to be sustainable should to make an income or at least free cash flow.
Mhm.
But at a minimum, you need to make revenue. The Nicolas of the world don't last very long. I'm seeing the comments right now. So if I was talking about, so in general, a company, if you're doing the accrual basis, the idea should be that revenue should be fairly, I don't want to say predictable, but
Mhm.
for management, at least it should be predictable. And it should be growing, or at least staying, there should be a band that it stays in. So with that in mind, there's a company I want to bring up that just find it very interesting in terms of revenue recognition. And like I said, we kind of talked about it on the income statement, but at a very basic level, if I for the accrual basis, if I'm doing a construction project and I get paid in increments, I don't recognize the revenue every time I get paid. I recognize the revenue as I complete different steps within the construction process, because I want to recognize what I've done, what I earned so far, because someone has to pay you for what you did. And so what this is saying is, what have we earned? So, I don't know if you're familiar with construction contracts, but generally, you pay 25% up front.
Yes.
You actually hit deferred revenue, and then you recognize as revenue as you fulfill that. Then you probably do another chunk, you get another 25%, et cetera. Well, if that's a company and you're reporting public filings, maybe you have those 25% payments fall between quarters. So you're going to have really lumpy revenue if that's the case. The accrual basis, it's more consistent. It's more recognizing revenue throughout the period, right? And it's more accurate of the actual reality of the business, in my opinion, for the most part. So I think in general, if you're going back to cash accounting, something is funky. Something, in my opinion, might not be completely right. And so we're going to look at a company here that did just that. So we have, this company here, Medical Properties Trust. And this company had something very interesting that we can talk about. So they reported their earnings for Q4. And what was interesting about their earnings, Bacon?
Well, I mean, from an immediate glance, you see negative revenue, which theoretically should not happen.
Negative revenue on a company that rents properties.
Yes. What did they do? Did they refund all these rents? I don't know. But then again, though, from an accounting perspective, that shouldn't necessarily be the case. And I highly doubt these fine managers and executives refunded anybody in that perspective.
So basically, this is interesting. And obviously, I think anyone sees this, an immediate red flag goes off. Now, if you're following the company, you probably already know what's going on. Mm-hmm. But it's an interesting thing just to show you what's going on when a company gets gets in trouble. So this company, they had some big renters, leasees, I don't know what the right term is, clients, who they were using the accrual method of accounting. And basically, I mean, the accrual method of accounting for renting to someone's pretty simple. Hey, they're in our building for a month. We're going to bill a month's worth of rent. The problem is they weren't paying. And so what happens is you have this big issue where you're recognizing all this revenue, but no money's coming in. And so in this quarter, they came out and said, what we're doing is for the clients that haven't been paying us, we're changing the accounting method year to date, I believe, or maybe it was just quarter to date, but I think it was year to date, to cash basis.
Yes.
And so basically what they did was they went back through all the previous months, or at least the previous months, if not just these three, I don't remember. But they basically said, okay, let's reorganize everything so we're recognizing how much cash they've paid, not how much revenue we've earned. And when they did that, it's an adjustment. So basically think about, I'm going to, just so people can understand, from an accounting perspective, I'm going to pull this up here and get all fun. An accountant's favorite tool right here. You know, we could do Google Sheets, but also. So I am MPW or MPT, whatever you want to call it. And I have revenue here. And then we have cash paid here. Revenue is just a flat 100.
Yep.
Is that 12? No, one more. And then we have cash paid of like 50, right? Where's something really simple. Well, now what happens is, because when you've been doing this, you've been crediting revenue, and I think we've talked about the actual journal entries to kind of get through it, but to go back and kind of rediscuss this, you have Let's do count. Just to piss off accountants, I do credit first, then debit.
Oh no! Why would you, you monster? Why would you? There are conventions.
So you're gonna have an
Okay.
account here of revenue. It's funny because when I do my own entries, I never felt like people have that convention in their mind, and I just kind of do whatever like I have in my head. Oh, I want to recognize revenue right now, so I'll like hit the revenue item first, and then hit the AR or something. But revenue,
Yes.
you're doing 1,200, and you have AR of 1,200.
Accounts receivable. Yes.
But yeah, you're right. I should spell this out.
No, it's
Okay.
fine. You're fine. You're fine.
But then you get here, and you only have cash paid
yes.
of 600, and you
Yay.
have AR taken down of also 600.
Yep.
So they get to the end of the year and they're saying, well, now we're going to say, instead of recognizing revenue on this accrual basis of when we earned everything, we're going to go by the cash basis. So now they're having to go in there and say, the accounting entry literally looks like this. It's like, well, if your cash basis, you don't have accounts receivable. And also you have to recognize, you have all this revenue too that you've recognized. Dude, what? Dog in her ball.
Dog in her ball.
You have all this revenue you recognize that you actually that you're not getting paid for. So then you have to go in there and you go revenue, and you're going to debit it. And a debit to revenue is a removing.
Yes.
Really, it would look like this. So you have to do the difference. And I mean, we know what the number is, but you have to do the difference of these two, right? And say, okay, that's the amount that we had too much revenue of. So now in the current period, we're backing it out. And then we do, AR, because you have to get rid of that too, equals that. So what happens is, if in this quarter we had, according to this, 150 revenue, but we backed out, 600, you end up having negative 450 revenue.
Yes.
Obviously, the numbers were different for MPW, but this was literally what they just went through. Was going through and saying, here's the revenue, here's the cash paid. We're changing our process. We're changing how we do this so that we're recognizing it this way. And in doing so, they had this one-time correction they had to do. And so that's basically what happened here. So when you go back to the report, it's like, negative revenues, because they had to recognize this massive negative number. Probably this one right here, I'm guessing, so actually it was pretty close. It was like 450 million of negative numbers one time they had to recognize. And that's basically like what they did. And they're saying it helps give a better picture of everything. My thought is, what they're basically saying is, we aren't going to get these payments, because the second, and the people need to understand this from an accounting perspective, the second you say someone doesn't owe us this money is the second they're not going to pay you. Like, if you're saying, hey, we're going to go back and say that accounts receivable doesn't exist anymore,
yes.
Well, then
something has to give.
Then your AR department's not going to be sending out the invoices and sending out the reminders and saying, hey, pay us, Yep. The money's never going to come through. Now, this might be just something that they're doing for public facing, and on the internal reporting, they might still be doing accrual and still billing those AR numbers. But part of me thinks that you're not going to recognize this revenue anyways, or actually ever get payments for it, and that's why they're changing to that.
Yeah.
So that's kind of like what happened here, and I thought it's an interesting explanation of the difference between cash and accrual, and kind of the reason when you see a company doing something like this, to understand just what they're doing, and probably why they're doing it. It's funny. It's one of those things, like when I heard. So McBuda's asking what would happen if they would receive the payments later. Are you saying if they're under a cash basis system, they recognize the revenue then?
Yes.
So did I delete that? Yeah.
Like,
so basically, the second they go back to this the second they go to this cash basis reporting,
Mhm.
it's like, let's just say they get, like, let's say they get a bunch of zeros here, or we'll do like 0 payments for like a full year, and then the year after they get 600. This quarter is going to look really good
Yes.
because they're going to have 600 million of revenue recognized in this right here.
Yep.
It might not happen for a year, it might not happen for 2 years, like who knows. But yeah, basically when they finally get the cash paid in, according to their metrics that they're externally reporting to people, they would recognize revenue at that moment. So like if you ever see a report from them and they basically have like this inverse where it's like they just have like a one-time non-recurring charge of like 450 million in revenue, it's probably because they got, or like my guess is it would be slower. It'd be like something that happened a little more over time, but you would see it just kind of come through this way. Hope that answered the question, but looks like he,
So supposing someone were to be very, very pig-headed or stubborn
Mhm.
and say, "Oh, this is financial engineering," because accountants should have allowance for doubtful accounts and should have bad debt expense. This shouldn't go into this. This should go into that. Uh, what would your response be to someone who has had a little bit of a accounting familiarity, but would be pig-headed in that regard?
So the purist in me says that that person's right and that
Mhm.
what these people should have just done, because we can get into how this works too.
Yeah,
I'm glad
yeah,
that we have this up here. So
yes.
under an accrual system,
Hmm.
we live in an accrual world.
a,
Um,
a cruel
you
world.
set up, and I think we may have talked about this, how you do bad debt expense within companies, right?
Uh,
So
maybe, but good to have a refresher, probably.
yeah. So let's
Yeah.
say on this account right here, let's
Yep.
just say I recognize the revenue. I have accounts receivable of 1,200,
Yes.
right? So we have AR here of 1,200.
Yep.
You have this account called allowance for doubtful accounts.
Yes.
And basically, this is an admission by a company saying we don't get paid 100% of our revenue or of our accounts receivable. Generally, companies, if they're decently well run, are going to have somewhere in like the mid to high 90s
Hmm.
collection rate. So, like, you should have this, times like 0.97 is like, well, actually, it'd be like, equals that times 0.03 is like probably what your doubtful accounts are, right?
Yeah. Yep.
Which is basically the amount you expect to not get.
Hmm.
So, what you're saying, what you're proposing, and what I think would make sense to a degree, I'm kind of thinking why they might not do it, is if they're going through and saying these guys aren't paying and we don't know if they will pay, why don't we just go back and say, and move a bunch of the accounts receivable into the allowance for doubtful accounts?
Hmm.
And one of the things that you'll notice, and I think this is a good thing to point out, if I pull up, this one should have it on a 10Q. Do they have AR on here?
They just have it under net, so it's probably just as
Nope,
a contra. Oh,
no, that's
nope.
perfect. Because that's what I was going to say. When you
Yeah.
report these, you have this word here that says net.
Net. Yeah.
What that means is it's net for the allowance for doubtful accounts.
Hmm.
So for in our example, let's say we have this AR of 12,000, allowance for doubtful accounts of 36. The amount that you actually see on the 10Q is 1164. That's like how it would actually come up on the 10Q, and that's very common practice. You're always going to see that.
Yeah.
They're never going to break this out. They might in footnotes,
Hmm.
but generally they won't.
Yeah. And part of the reason as to why I called that person pig-headed is because for the preparation on this, I also looked at the 10K off of SEC Edgar, and page 63, 62, 63 is where we have the handy dandy auditor's opinion.
Mm-hmm.
And guess what takes up a fair chunk of page 63?
Is this?
This topic, yes. And the hilarious thing is when it comes from like a revenue recognition perspective, it's the only thing that their auditor has quote unquote like taken the time to
Well,
talk about.
well, this is why it's so weird because when you're a company and instead of following the procedures of the accounting method that you're doing, you're like, we're going to switch it to another one.
Hmm.
It's really weird. Like
Yes,
you're
yes.
hiding something, is what I think. And that's why what the auditors are saying they should have done, and what
Hmm.
I kind of think they should have done. Now, I know there's a logical reason they didn't, but if you go like basically they should have said bad debt, like they should have done an entry that was bad debt expense
Yes.
and uh, let's
Generally
do
speaking, it,
allowance.
yeah,
I was just
it's
trying to think. I was being lazy. I could have just
mhm,
copied it like this,
yeah.
but um, and what you would do is bad debt expense. Remember, I'm just being an asshole and switching the
Yep.
debit and credit.
Yep.
But you do it like this, and then you would end up having your AR, be reduced to 600 net.
Hmm.
They didn't want to do that for some reason. I mean, the ending result is kind of the same.
Yes.
I don't know why they didn't want to do it. It's like really weird.
The
Um,
To be fair though, like the details around the company, like in question that MPW deals with,
mhm,
is that they are working on securing the money, and the like credible steps are being taken.
mhm.
So it could be this such where this reality does matter, and it shouldn't. It may be unfair for it to all hit bad debt expense. Probably is my
Right.
assumption. Yeah.
Well, the thing is, it doesn't all have to hit bad debt expense,
Yep.
but you're essentially doing that when you're changing to cash in a way.
Hmm.
So, okay. So if we back up,
Yes.
here's what's happening as
Hmm.
I think through this. Okay. I think I know why they did this. So if I put anything to bad debt expense, you're right.
Yep.
Essentially, it's gone. You can have a recovery of bad debt, and that
Yeah.
happens
Certainly.
sometimes
Yep.
where you
Yep.
have credit recovery bad debt, which is a revenue account.
Hmm.
You're going to debit allowance for doubtful accounts, which is a contra asset, so it has a credit balance, and then you're good.
Yep.
But it's very rare that happens. So if you're expensing the 450 million or part of it, you're admitting to people we're not going to get paid that money.
Yes.
If you say, well, we're just going to switch it to cash,
Hmm.
then you're kind of leaving it open like, well, maybe they'll pay us in the future.
Yeah.
And so the auditors are going to come in and say, this is an accrual method, your accrual accounting, file the accrual method and just expense some of this. And my guess, so generally within a company, so I
Hmm.
think I've taught this before, within my company, um, what I set up for our bad debt expense policy is if anything gets to 120 days bucket,
Yeah.
75% of that we just write off to bad debt.
Hmm.
So the idea is don't let it get there, obviously. Uh, so, um, so my guess is under their doubtful accounts policy, a lot of the stuff probably already hit the point where they would write it off, but they didn't want to do that.
Yeah.
So they probably had a policy that said, um, once they get to 150 days past due, we write it off. Well, when one of your biggest tenants is 450 million at that point, you don't really want to write it off. You're like, nah, let's figure something out.
Yeah.
And so they said, well, instead we're going to go to cash basis. And that's, I guess, what they end up doing.
Hmm.
So I see why the auditors be upset about that. And I see from a managerial perspective why they wouldn't want to do that. Because
Hmm.
they're saying, well, we want to work with them. We want to try to get all this money paid.
Yeah.
But like the thing is, to be fair to and this is why medical properties trust, by the way, invest at your own risk. I'm not saying that it's like you
A buy
100%
or a
will
short.
lose
Yeah.
money. Yeah, but it is very risky if you go out. I mean, it's not had a good run of things. So
Yeah.
uh, but the other thing you have to remember too is messaging that other companies are going to get from your statements. If I am your
Mm,
tenant and I see, oh, they wrote off our, hey, they wrote it off. They wrote off all of our stuff. We just got to wait them out. Eventually, this will go away. Just wait it out with that old stuff.
yes.
So I guess as I kind of think through it, that's probably the reason that makes sense.
Yep.
Um,
And
Mick
the
Buddha,
the McBuda tea.
there's hope I'll see a Korean
Uh,
dish, my default Lebanese
that
bond.
that comes with a whole separate other can of nuance, which I'm sure you're already aware of.
I don't. Was that like Lebanese government?
Yes, yes. If I remember correctly, he had a speculative play on that. For a while there, it seemed like it was going okay. I don't know how it's been doing these days, but yeah, of course, bonds said all about the contract and structure of those
Oh,
bonds.
did they
Yeah.
stop paying on them?
Don't know. I haven't talked with him behind the scenes. Uh,
How is
but
Lebanon doing over there then? I guess not very good.
um, well, I mean, last I saw, the government hasn't collapsed for whatever that's worth. Uh, I don't know if that's much solace to the bondholders in this case, but
Oh. Well,
uh,
anyways,
yeah, yeah. With the topic of MPW, yeah, no, that is an understandable thing, and yes, their auditor being PricewaterhouseCoopers in this case, did list this as a critical audit matter, but they didn't have too much else to say when it came to just revenue recognition.
hmm
And if it were that serious an issue, then uh, PricewaterhouseCoopers wouldn't have their name attached to it.
well, they're basically saying, yeah, we understand what the issue is here, and
Mm,
we're calling it out. So if this causes anything to happen, but yeah, they're gonna give a clean opinion, I'm sure.
yeah, yeah.
And
Otherwise,
hmm
yeah, they would have really dragged their feet on this.
yeah, if you want to talk about a company, is B Riley had
Oh
filed their
yeah,
financials yet?
yeah. Their auditors have harumphed many rightful harumphs.
Yeah, so uh,
It's
this is a company here
yes.
that I don't know how long they've been like delaying filing their financials, but if you see here, like a financial announces notification of delinquency with the Nasdaq, and I think like they actually got into like a fight with their auditors. Um, would it be under maybe news?
Uh,
Uh,
maybe. I mean, like, yeah, outside of that headline that they had there for their press release.
I want
Um,
to say someone asked them like a question on it. It was like a weird. Uh,
yeah,
Audit
it's
committee review affirms the company acted properly with regard to management. Yeah. So like this is them kind of like publicly disagreeing with.
their own auditors.
Yeah. So when this happens, be very worried.
Yes.
The reason you're disagreeing with an auditor is because there's some bad stuff going on and you don't want them to say that bad stuff's going on. So just
Yeah.
yeah.
So it's a really complicated company, but it is one where the short interest at the time of recording is very high for very obvious reasons. Just some digging will produce
I'm
some results.
surprised though it's kind of bounced up to the 20s.
It's I honestly I wouldn't be surprised if it's a matter of flows.
Mm,
Yeah, because this is a crap show, but where there's volatility, traders will play.
that's true. Yeah, B Riley fails to file audited results as grace period ends. So
Yep.
like this is disaster. This is potentially bankruptcy in the future. Like
Yeah.
um
Yeah.
so the last company I see do that was Tattooed Chef.
Oh yeah, that was a fun one.
Yeah.
Yeah, as far
So
as like repeatedly failing to provide proper financials with auditor approval.
yeah. So if we look at these guys, are they levered? Well, we can see it right here, but
I say repeatedly, but I only remember like two times. I want to say, even though they yeah, that was a crap show in and of
oh
itself.
my gosh, they have a lot of debt, don't they?
Yep. It's a complicated company.
Short-term borrowings. I guess that goes against the securities owned. Oh lordy.
It's fun times. There's
Yeah.
a reason. There
So
are
back to
reasons.
revenue rec.
Yes.
But I mean, but that's really, the things just to kind of cover and talk about so you understand kind of how these companies recognize revenue. And one of the things within GAAP accounting, because GAAP is a framework,
Mhm.
every company should they have a revenue recognition policy.
Yes. Yes. And off the 10K, I believe that was page 79 at the very bottom is where they start it, and page 80. If we want to quarterly, I'll defer to you.
No, I mean, I don't think we want to go through it necessarily because it's very,
Yeah.
There's a lot in there.
Yeah.
Well, the point is that, right here, revenue recognition.
Yep.
So every company will kind of go through, say where their revenues come from, say how they, recognize all these different kinds of revenues.
Mm-hmm.
And you may or may not want to make sure you understand how they're recognizing revenue, just to make sure you understand what's going on with the business. One of the things I pointed out before was like, I think Google, they not always just looking at the revenue is the big thing. It's also looking at the remaining performance obligations for them, which is essentially deferred revenue, and how that shows where sales are coming from. Because if you recognize revenue over the life of a contract, but you're signing a contract today for a 2-year contract where you're going to make $5 billion, well, that might mean a lot for your future cash flows, but not a ton for the cash flows today. And so and people care about future cash flows for businesses. But yeah, no, I mean, they talk about their ASC A42, which is like, I'd have to go back and re-look at that stuff. I remember I had to know it really well for the CPA exam, but there's a reason they call it the can't pass again. So
that's inspiring for a lot of the accounting hopefuls.
Oh no, they have all awesome acronyms. Can't pass again, certified pain in the ass. There's a whole people. I was reading a blog or a Reddit post, I think, where people are just giving up different acronyms for CPA.
Very nice.
I mean, no, it's just honestly, I think anyone can pass the CPA exam. It's just how much time do you want to devote to it? Because it's a lot of time, basically. So yeah, but it's very helpful to get your Are you planning on getting your CPA, or are you kind of undecided on that?
I'm relatively undecided on that. I'm thinking of as far as like government accounting certs goes.
Mm-hmm.
Once career path is started, then try and juggle that while doing the job, doing the career. But so, that's where I'm leaning right now.
For all 5 of you watching, if any of you are thinking of taking the CPA exam, I really like this guy, I-75.
Mm-hmm.
I used it in conjunction with Becker. So my company paid for Becker, but I paid for I-75 myself. And he actually goes through and like explains concepts. Like one of the problems you'll know if you're someone studying for the CPA and you're listening to Tim Garrity, like do the stupid acronym. Where he's just trying to have you memorize like the car went under the water for the 4th, some stupid thing. It just drove me nuts. This guy just kind of walks through the logic with that behind things, and I really like it. Mm-hmm. So if anyone is thinking of taking it, I strongly suggest this course. It was really good for me.
Yep.
And what I would do is just the exams on this, and he even kind of says it's supposed to be supplemental. So like the exams on it aren't very good, so I'd still use Becker for their exam bank. But super solid course. But yeah, that's it on revenue rec. So you got something you want to go through?
I guess looking ahead for us and the viewers.
Oh,
What do you think? I remember that behind the scenes you said you expect to be away from a lot of people for next week because a lot of big tech earnings will be happening.
no, I'm
Uh,
away because I'm on vacation.
oh,
So
yay!
I will not. What I'm saying, I won't have a phone. I won't have anything next
Oh,
week.
wow.
I am off the grid next week.
Hey,
So, um,
two
yeah, going.
accountants, zero grid. Let's go.
Ah, you can bring on Fabio. He's an accountant, right? Or he was. No, he
Uh,
still is. He's a CFO, so he can talk about these things.
he can. That being said, though, like part of me also wants to do a solo live stream of -2 accountants.
Oh yeah.
Yeah, because like one of the ideas that I had was because for people viewing, now or in the future, the spirit of this channel was to help people that if they care about fundamental research into a company or
Hmm.
want to incorporate that in a possible investing style, this is a way to go about it. And part of that might be me throwing in some off the wall concepts and tangents, maybe accounting related, maybe finance related, and yeah, I have a topic in mind that maybe I could do a live stream tomorrow, or not tomorrow, but next week, solo sometime. So if you would like that, feel free to give us feedback.
Yeah.
Yeah, yep.
And I would love on my return to see a solo bake.
Uh, but yeah, so vacation. How long will you be away?
A
Off
week.
the grid? A week?
Yeah, I
Just
think I think I'm leaving Sunday. I think I technically get back from being off the grid. I think I go off the grid, so to speak.
hmm
I want to say Monday,
hmm
and then I think I come back on the grid Saturday potentially.
Alrighty.
But I'll be gone the whole week.
Alrighty.
So like Sunday to Sunday.
Sunday to Sunday. Not a problem.
Yeah. So no, it'll be fun going to go do some stuff with my wife and then my mom and dad and a couple of my siblings. So we're all
All
gonna
right.
go vacation together.
Yep.
We're not getting the Wi-Fi package. I was like, nah.
Might as well, yeah. Just enjoy yourself vacation as far as like family time. Why not?
It's kind of cool too to like kind of cut off the noise and everything. Kind of just
Yeah.
so I'm
Uh,
excited for that.
that being said, feel free to viewing public to give us feedback on as far as improvements or
Mm.
topics in the future. Even though we already have a fair amount. Oh, the next, if we wanted to do a structured series,
Mhm.
were you up for parts of the of a like say a 10K, such as like part one? Oftentimes, in a 10K, company will be like about us, what we do, and risks and legal perspectives, and then part two. Oftentimes, there's topics like auditing, uh,
So,
other
so
details.
I'm definitely down for it, especially because I feel like you're disrespecting the about us section. So I will, because I am a huge proponent of people reading that. So yes, yeah, we can we can definitely talk about that.
Wait, we have an about us section?
Or like business, like the business where it talks about like the business, what it
Yes.
does. Yeah.
Yes. Okay. All right. That part. That part. Yeah. No, that is fair. That is fair. I didn't know if you were referring to the channel or something else.
No, we do not have an about us, unfortunately.
No, all good. All good. So,
And we might
yeah,
not be as sexy as like, guys that focus on cash flow, but we
there's a
hope
big
we hope that some people here are getting some value out of this. So
yeah. I think we have like people behind the scenes have already given us some constructive feed or surprisingly pleasant feedback saying, "Hey, I didn't realize this topic or that." But
good.
yeah, did you want to promote anything, Andrew, as far as any projects you have in the works?
Any projects I have in the
Yeah,
works?
projects or your I don't know social media stuff if you want. I don't know.
Oh, we can plug our social media if we want.
Yeah,
Happy
you can. This is this is their
What is my
channel
social
also.
media?
Yeah.
I won't be able to post soon unless I pay, so I don't know if I'm going to do it anyways.
Oh,
But here's my social media. I guess it's Andrew
I don't know
M.
if it's sharing right now.
It is not. So good point. Let me
Yeah.
add it.
I see it as a behind the scenes person, but there
Yeah.
you go.
And I don't post that often. Obviously, I reply, but if you follow me, I'll probably follow you back so I can comment on any posts. I mostly just go and comment on things I find stupid. Like I found this one cracked me up. Someone's really upset at BTI. Chico Valley Cat Trap just keeps falling. And then someone said, "Now do free cash flow per share. I don't care. Stock go down." To anyone out there that's a BTI investor, I know there's some of you out there. People, it doesn't matter about the fundamentals. Stock go down.
Good old back and forth on Twitter. Wait, hold on.
Oh yeah, like, subscribe,
Twitter's-
and click the bell. Thank you.
Oh yeah, yeah. Please do. Is Twitter charging people in the future or?
Supposedly you're gonna have to be like verified to post
Oh,
because supposedly you can't figure out bots any other way.
thanks, Elon.
And then
Okay,
your
not
Twitter is
Elon.
what?
That's not fair.
Bacon
That's not fair.
memes right here.
Yes.
Oh,
right there.
yours is a lot
Yeah.
easier too. It's just
at
OG
zero
with
G.
a zero.
Yeah, 0G bacon memes.
Yeah.
Yep. Yeah, it's cringeworthy.
Yeah.
Yep. That graph, I don't know if it's verified or not. I just thought that it was cute.
Yeah. And I'm following, so you should too. I'll say that. So, but
Yeah. Anyways, I don't have anything else. If you don't, thank you
No.
all for sticking around,
yeah,
and hope
appreciate
you
it.
come around for more.
Oh yeah, come around for more. I know most of us are all in the same capital mindset community, so I'll see you all back there.
Yeah,
For those of you that
post-launch.
aren't, then we'll see you next time.
Have a good one, y'all.
Bye.